Hey guys, welcome back to the Capital Mindset Show. Today we're going to be going over Wayfair. It is a company that I briefly mentioned in the Amazon video. If you want to go actually check that out. But if not, you won't hurt my feelings. Don't worry. So Wayfair, for those of you who don't know, is a online retailer pertaining to furniture. You know, you go on their website, you buy your furniture, it gets delivered to your house. I think it's fairly convenient. I think the prices are fairly well. And taking a look at something that's in the portfolio on the speculative side, we have Overstock. And I might cover Overstock a little bit in this video as well, but the focus will be on Wayfair. So taking a look at what happened to Wayfair, I'll show you guys the price action. It's been pretty brutal. Over the 1 year, it is down about 80.58%. 5 years, it is only up 2.75%. So I actually call this dead money, right? So I'll call this dead money just by looking at that. Now the market cap sitting today is 6.56 billion. I remember when it was much larger actually, and so it's kind of interesting to look back on it now and see where it's at today. So I own, for those of you who don't know, I own Amazon. You might see that in the public portfolio. Go, and if I've been getting a lot of questions regarding, you know, for example, I've received questions, you know, where can I find your portfolio? In any of the videos that are called Portfolio Update, it should be in the link there below. All right. So Wayfair. Okay. So back to this. I own Amazon. I buy furniture off of Amazon. Actually, I bought this desk off of Amazon, funnily enough, not on Wayfair. For me, Amazon is just a little bit more convenient for me, but I see that there's plenty of opportunity for many different players. And again, I also own Overstock, but I don't invest in Overstock for the main business. It's kind of like just a bonus that it's there. Again, that's why it's in the speculative side of the portfolio. So just in case you guys were wondering, not a spiel on Overstock by any stretch, but you know, there you go. All right, so Wayfair, what do we have looking forward today on this company? Well, they just reported earnings last week, and actually, let me take you guys back here. If you take a look at this let's take the 5 day. Yeah, you see this massive drop in a single day. Was pretty crazy. And then you had the continual drop since then, about another 15.59%. So 15% in a single, or 18% in a single day, another 15% following that. So pretty brutalized, if you ask me. I don't think anyone's going to deny that. But yeah, we take a look at what basically happened. Active customers fell by 23.4%. A bit of a concern there. So why are you concerned by active customers dropping? Well, for obvious reasons, you know, you have less people on your website. And think about it like this. Well, we also talked about consumer data reports showing that retail sales were actually dropping online. So e-commerce sales by about 1.4%, and in-store sales actually grew by about 10%. Now you might be saying, well, yeah, but that's from a small number or small base, so of course that's going to happen, and I would agree with you there. So let's actually explore this further. We also see that specifically, not necessarily broadly speaking, but specifically to Wayfair, we did see an EBITDA loss of about 113 million. Now, for those of you who are kind of newer to maybe finance or accounting, EBITDA is another way of just saying operating income. So when we look at the operational aspects of the business, we use EBITDA, and it's just earnings before interest, taxes, depreciation, and amortization. Okay, so we don't really use it for evaluation too much, but it is a widely used metric, and that's what the company reported on. So the fact that they're negative on EBITDA is kind of a big deal. And so again, we looked at the active customers, and we did see that 25.4 million. All right, so that was the amount of customers, and orders per customers were also down. So this is another bad double whammy for Wayfair. So on top of the fact that there's less customers on the platform, we also have less orders per customer. Okay, so we also noticed that orders delivered were off by 29% from the previous time, and the revenue per active customer was actually, unfortunately, was up to $520, but it's only up about 12.8%. We have to, you know, think about, well, inflation's a big factor in that because if prices rise, of course, we're increasing the amount of revenue per customer. Okay, so to summarize, orders delivered were off 29%. Active customers were down, and orders per customer were also down. So a little bit less volume in terms of units. So they also guided lower for the rest of the year, and pretty much a lot of the similar sightings we've talked about with Amazon and eBay, Etsy. Well, I didn't really have dedicated videos to that, but if you watch the Amazon video, I discussed a little bit about that. So e-commerce is a little bit strained at the present moment. There's been a lot of overinvestment into these companies, and so you have kind of what you're dealing with today, which is these companies having to deal with that overinvestment and kind of reel things back, kind of smooth out what their expectations are for the rest of the year. And yeah, it's just toned down a little bit. So a once high flyer flow too close to the sun, invested too much in perhaps their infrastructure, a lot of these companies. And now they're seeing that, okay, well, a lot of the demand was pulled forward. And so we have to take a chill pill. All right, so I'm going to take us through the investor presentation. Remember, this is like the sales pitch. If we don't find anything that we like in here, we're probably not going to like anything else about this company. So we have our market. Okay, cool. Nice little picture. Customer value, individuality, emotional connection to their homes. Okay, I understand that. So one thing that you might be thinking, and I put a little pause, what benefits them? What macro movement benefits this company? Okay, so if you guessed home ownership, you'd be correct. And as you can kind of see, they're highlighting that on the right. The more and more people kind of move into the from urban to not rural, but suburban setting, that's going to be beneficial. We know that that's kind of the move right now, the moving away from cities. Not entirely, but to some degree. And I think, it's maybe a little bit more of a healthy lifestyle, in my opinion. But regardless, that allows a greater amount of potential for this company. And so, for example, I don't live in the city. I don't really have a desire to live in the city. Maybe one day I'll live in the city for like maybe a couple months or something like that, just for fun, I guess. But my wife and I, we like to go to New York occasionally, and so we have fun there. But it's not really a city I'd live in. I love the food there. I love the variety and all that. But yeah, it's all good. It's all well and good. So the home category will exceed 1 trillion by 2030. So this is their TAM. TAM stands for total addressable market. For those of you who may not know, we see that Wayfair in 2021 was about 14 billion. So what they're saying here is, look at us. We have so much potential. This is why we're a good investment. And we have to take that with a grain of salt. It's like, okay, well, while that is the total addressable market, it's a heavily fragmented market, because this is the largest. Well, you have to consider Walmart, you have to consider Amazon, you have to consider Target, you have to consider all these companies. And there's a lot more that I didn't mention there, but you can probably think of a couple other furniture stores. You can think of some local furniture stores. So this is a very fragmented market, but it's also a very big market. A lot of room for everyone to grow. Like I said, just because I think I own Amazon doesn't mean I don't think other players can be successful in this space or this category. But, just I wouldn't say that, oh, they're going to get 1.2 trillion in revenue by 2030. That would be unrealistic. All right, so taking a look at what they showed, the U.S. home category, business to consumer online penetration, we want to actually pay attention to what's been happening there. 2020 was 21% and then 20% in 2021. A lot of people I've noticed, and this is actually some data that I'll actually give to you guys. It does appear to be, for now, that a lot of people do prefer to actually see the furniture in person, feel the furniture, because it's something they're going to sit on. Now, what I've noticed that is for more decorative things. When it's something that's a practicality, like let's say a folding chair, or other forms of cheaper chairs, or it's a well-known brand that you already know, people are more willing to buy online. But sometimes when it's decorative, like the furniture in your living room, stuff like that, for now the consumer still prefers to actually go and see, to kind of figure out the sizing. Even though a lot of companies like Amazon, for example, and I assume Wayfair and Overstock have technology that allows you to kind of fit the furniture in your room. That's all well and good, and that kind of fits that purpose. That's what we're seeing still with the consumer. So you can see that flattening out. It kind of makes sense. But we do see 50% plus higher penetration in categories today. So they are making progress. But, again, there's still a lot of, I guess, competition from in-store. Okay, so the online category isn't like the massive dominant one. It's still, still growing in that sense. And there's still potential to kind of improve upon that. So I'll actually say that on their end. Oh, so who we are. Okay, who are you? I don't know who you are, Wayfair. So they have supplier services, fulfillment, shopping experience, customer service. So this is the flywheel effect that they're trying to identify. So flywheel effect basically insinuates that as they improve upon any of these four categories, they kind of improve upon each other. And then as they improve upon each other, they build upon each other and kind of create a good I don't want to use the words flywheel effect within the definition of flywheel effect, but essentially it provides value to everyone in terms of customers, suppliers, and the business, right? The business which we are participating in. So you can see there 25 million active customers. I got to remind you that we had a little bit of a struggle there in terms of the report, but neither here or there. All right, so okay, yeah. Let's see here, the breakdown. Actually, the breakdown is pretty important. So household brand status in 3 out of 4 markets as measured by aided brand awareness. So they are 82% of consumers in the United States, 85% in Canada, 77% in the UK. And then, yeah, okay, so they don't really have the data for Germany. That's fine. Okay, so what we have here, we have the branding. So we have Perigold up at the top, and then we have other ones on the right, but Wayfair, we care about Wayfair. Wayfair, what they're trying to say is they fit the full pyramid, okay? So they have stuff for economy. So households of 60K and below. They have the mass market, which is 60K to 175K household income. And then they have the luxury market as well, above 175K. So Wayfair is trying to say, well, we're a place for everyone. You know, you can come to our website, you can get cheap stuff, medium stuff, expensive stuff, all of it, okay? We're not just focused on the high-end stuff like Perigold, okay? So that's good to know, and it does mean that they have a lot of opportunity to upsell. So loyal customer base is expanding. I have a very good friend of mine he's extremely loyal. He always buys stuff from Wayfair. I mean, yeah, literally. It was funny, and when I was talking to him about this company last year, he's like, "Oh, I bought this new furniture on Wayfair. Do you like it? Do you like this piece?" I was like, "Yeah, okay, cool. Where'd you?" Or I'd ask him. I'd sit down on a couch and it was very comfortable, and I'd be like, "Wait, where'd you get this couch from?" He's like, "Oh, I got it on Wayfair." It's like, how many things do you buy on Wayfair? Yeah, I never thought I'd have a friend that's so obsessed with furniture, but you know. All right, so our supplier universe is broad, highly fragmented, and unbranded. Okay, so why is that important? Highly fragmented, you know, less risk of supply chain. That's why they're even highlighting it, because a lot of companies have been saying, our supply chain this, our supply chain that. You see they have 23,000 suppliers, and then no supplier represents more than 2% of revenue. See, why are they highlighting this? Because a lot of investors are focused on supply chain. That's why they're highlighting it. So good to note that they're not highly concentrated in terms of suppliers. Okay, how we win. Okay, so this is actually them trying to make the case for why their business model is superior to that of others. Shopping experience, merchandising, marketing, operations, supplier services. All right, cool. Remember that they're highlighting supplier services a lot. Have you noticed? All right, so products visualization, so the technology, there it is. See, that's what I was talking about. They all have the technology that you can kind of put the product in the room and kind of see, oh, how does it fit? Does it not fit? All right, let's take a look at here, driving robust growth at scale. So this is kind of like the story. You can see how in 2020, a little bit dip at the end there. So not too good on that front. And I think we'll kind of end off here. And we'll actually hear first. So long-term net revenue, so meaningful scale, financial highlights. Okay, so long-term debt, adjusted EBITDA, inventory light model. Oh, that's actually good to highlight because inventory light is good. Okay, and it's actually impressive that they are one. Limited CapEx. Yeah, so they're not many investments necessary. So a good business, I'd say. Okay, right off the bat. But we want to be very careful with, you know, just providing value to the customer and not feeling or planning for a way to actually get value in return longer term. I assume that, of course, they're going to say that. They have a good amount of cash, so we'll actually see how that kind of squares off with their debt. And yeah, I think that's good enough. Global headcount across variable count roles. Okay, so they're basically saying they have a lot of warehouse employees. That's good. That's a good diverse amount. All right, so we're going to move over to the model, and you guys probably see, oh, TTCF, he must have done a TTCF video. Yes, I have. Go check it out if you want to. It's just an update. So we're going to type in W, and we're going to get Wayfair. Wait for Wayfair to come up. And let's actually start ignoring these because we have different growth rates for this company. We don't have this yet, because we do not know, and we're going to say no for now. Okay, so it is cash flow positive, but just it's just barely. Looking at the price to free cash flow, it is sitting at about 37.99 or about 38, so around there. And so the price target does imply 163.96% upside by analysts. And they also have a neutral rating. And yeah, so sentiment score is just below 1. So, you know, there you go. Altman Z score is implying not risk of bankruptcy. The model's own metric is saying it's not risk of bankruptcy for now. And taking a look at estimates are growing. Estimates are growing. Cash flow as well. Shares outstanding are growing as well. So how much were they growing? They're growing about 2.46%. So I think that was a good move, if I'm being honest, just on a bird's eye view. It does appear that shares have been, didn't mean to do that. Meant to do point. There we go. So shares have been kind of overvalued over this time period. So by issuing shares, they're doing a good thing by lowering that cost of capital. Now let's take a look at the ratios, kind of get an idea for what this company's been doing. Current ratio looks good. Cash ratio, can't fault it for that, but it's getting better. Solvency ratio looks pretty it's okay. It's okay, actually. Long-term debt ratio, so they are accumulating more debt. Long-term debt to capital, debt to equity, financial leverage. Okay, so things are getting a little bit worse there. Interest coverage, it's getting there. Gross profit margin. Gross profit margin is getting better. They are scaling better. Operating margin, it is positive finally. ROE, ROA, I can't really go with those because they're right now negative on a GAAP earnings. And ROIC, okay, that's pretty good. But then, 2020 was a fluke year. Earnings quality, it's here and there. So not so good there. Yeah, so that's pretty much all I have to say about those things. So, let's again see, okay, barely mentioned anywhere. And let's see, Wayfair, despite a 14% drop in sales, Wayfair is prepared for the inevitable cooling in the home market. Okay, yeah, because that is expected. And by the way, if you guys remember, I did actually touch base upon my thoughts on the housing market. And I'll give some brief thoughts here because I did say I would mention it in the video preceding this today, announcing that I was going to do these videos tonight. So me and my wife are looking to buy some more property, some more real estate. And so we're kind of just seeing what's going on. My wife's also transitioning roles into a new company. She got a promotion by changing to a new company, and it's a very good company. I might be able to talk about it after she finalizes and accepts the offer. But we're also looking for another home. And so we're also looking to, actually, to be honest, we're actually looking to downsize in that sense and be able to put away more and more money, maybe buy more assets. And what I'm focusing on, for example, when I spoke about this, when I looked at the Wells Fargo earnings, is that I wouldn't be surprised within the next 6 months that as lending kind of crunches down and that demand actually gets driven out of the market from the form of the buying pressure, we do see some normalization in some regions regarding home prices. Now, depending on where you live, that might be feasible or not feasible, as in there might be so much demand coming in that might not necessarily be the case. But in some instances or in some homes or regions, you might actually see a little bit of a drawdown in terms of those prices, and that might be a good opportunity. So we're kind of hoping that occurs within the next 6 to 8 months, or maybe a little bit longer. We can wait. It's okay. We're no rush. And so then Wayfair, again, like that article title was saying, was Wayfair can survive this. So that's the proposition, that it could survive this. Now, taking a look at what we have here today, I'm not implying any growth rates right here, but I do think that it is possible, that the company does grow in line with what it was expected. And just to be clear, the revenue actually declined, and it is expected to grow moderately in the coming future. So what I'd say is, if you want to be, I guess, on the aggressive side, 20% would be probably more aggressive, if anything. And I know it's crazy. You're thinking this is absolutely insane. I get it, but that's what we're seeing. All right, so what I think is that, by the way, actually, this is the numbers I actually came up with before, because I think, for example, they could grow faster than the actual sales. And so, wait, I meant to put this actually here. This is supposed to go here, and this is the number that's supposed to go here. So this is the high end, okay? And this, I'll explain what's implicit in each scenario, and then more likely is in these ranges here. Oh, and this one's actually supposed to be the 35. 35, 30, 20, and then a 10. Okay, so let me explain a little bit or briefly what each scenario implies. So that 45% implies that they're able to achieve efficiencies. Oh, and by the way, that's if you want this margin of safety. If you're not looking for that kind of margin of safety, there you go. But I'd be very cautious on that, because especially in kind of the environment we're in, and we kind of talked about that briefly in previous videos, but you want a decent margin of safety. You want to take into consideration the environment that we're in regarding, the consumer, where consumer spending might go from here. Remember that the oil trade we were in was very successful. In order for that to be successful, oil prices have to go up, right? And that's going to squeeze someone. And then we also have food prices rising. All these necessity goods are actually going to drown out the consumer spending into these leisure or luxury goods, Wayfair, being one of those sellers. We also saw a drop in sales from something like Overstock. I did talk about that as well a little bit, but looking here though, That 45% does assume that we get past that. And again, we are assuming that dilution. So it's even with that dilution, it does say that that's possible. So we get past that, and they're able to grow the efficiencies within the business and generate more and more cash flows over time. Now, from there, you can see that things get less rosy as we go into the scenarios. And I actually, again, do believe that those probabilities are probably accurate. So I actually adjusted them based on that. And so I'd say that 20 to 35% is perhaps where I would bet my hat on. So scenario 2 for 4 is where I think the company is going to achieve over the next couple years. And with that being said, those are the prices where I'd be interested in. So Wayfair, I think, all in all, to kind of conclude this, and so you guys can also get my final thoughts. I think it's a good brand, a good company, but in a difficult industry, which then, you can be good, but you almost have to be great to be successful. And you're dealing with the likes of Walmart, Amazon, Target, who also have their own online platforms and also have the same technology and also have definitely they have even stronger distribution channels. I'd say that Amazon is not as focused as you might think in terms of furniture, while Wayfair is entirely focused on it. So in that sense, Wayfair is kind of the niche player. Now, the implicit, you can see actually on the right-hand side, I've actually added this for helpful visualizations down here. As I'm highlighting that's the percentage implied to actually get to those price targets. They're not price targets. I want to be very clear. They are more like prices or points of interest, and that's about it. So on that note, guys, I want to leave you guys off there. I think I pretty much covered everything that I wanted to say on this stock. But if you guys have any questions, go ahead and comment down below. If you guys like this video, go ahead and feel free to leave a like. If you're new to the channel and you want to subscribe, go ahead and subscribe. More video votes happen on the Discord. It's free to join. You just have to actually pass through the filtration process to avoid any spam bots. Now, I will be actually conducting a further filtration process in the future that I've already kind of been in discussion with the moderators. And that will be for eventually making sure that people are still remaining active, because then we don't want, some people just joining just to see what other people are saying, but then not contributing to the conversations themselves. And you can contribute in any little way. We have a thing that can keep track of any forms of contribution whatsoever. So if you just contribute in any little way, that kind of lets us know that you're not, just like a spy bot. And I'm just kidding, but you know what I mean. All right. So on that note, guys, thank you guys so much for watching. I'll see you guys in the next one.